Thank you. Well, tax season may seem like it's a long way away, but as 2013 starts to wind down, it's time to think about the financial moves to make before the end of the year. Our money man, Bob Ingram from Ameriprise Financial, is here with some advice to help lower that tax bill. All right, we want to hear this. So we know that this time of year can be really busy, but what do we need to focus on first?
Well, if you're trying to reduce your tax bill, there's some things you can still contribute to, you can still add, and not only increase potentially your savings, but also reduce those taxes. So if you have an employee retirement plan, 401k, 403b, particularly if they offer matching contributions and you haven't maxed that out, definitely take advantage of trying to get more money in those retirement plans, certainly up to the maximum match that you have, because there's free money right there, plus you're actually, of course, reducing your taxable income. The other thing, of course, you can do is you can add to things like, your health savings account. If you're contributing to IRAs and you qualify for the tax deduction there, you can still do that. Of course, you'll have all the way up to April of next year to do that, but you can still do it through the end of the year. Charitable organizations, if you're making charitable contributions and those are going to be tax deductible, start to get those organized so you have an idea of the total number, what those are, have the receipts available, makes tax prepping much easier. And then also you want to look at the investment side of things. If you're going through, great time to be rebalancing your portfolio, and now's the time to do some tax planning in terms of your investments. So if you have capital gains, maybe managing how much of those gains you want to take versus rolling over to next year to manage those taxes. You may also do some harvesting tax losses. I know in the portfolio, hopefully, most things are up right now, but you may be able to find bond funds and some things maybe you purchased earlier in the year. They've actually come down a little bit in value. Maybe you can sell some of those things, take those losses to offset income. And remember, for folks that maybe have an income of $200,000 for single filers and $250 modified adjustment gross income, we have that net investment income tax this year, that surtax, the extra 3.8% on top of regular capital gains and income tax there as well. So there's some great things you can do to help offset those taxes as well.
Okay, so that's good advice. What else should we be doing out there? You're saying that there are things that we should not overlook.
Right. If you're like 70 and a half, for example, and you have retirement plans, you certainly want to make sure you're taking your required minimum distributions by the end of the year, by December 31st. If someone is 70 and a half, turning that this year, you can actually wait until next April to do that. But then you also have to do 2014. And so some planning, around how much you want to actually take this year versus next year, if you don't want to have too many taxes as well. And inherited IRAs, you really want to make sure that if you have an inherited IRA and it's a non-spouse, you still have to take required distributions from that, and it's calculated typically either in the first 5 years you have to take everything out, or you can choose to do it based on your life expectancy, and there's some calculations there in the IRS tables where you just divide the balance as of December 31st last year, what that balance was in the account, and divide that by that life expectancy table, and you can get that calculation. So those things you definitely want to make sure you talk with a tax advisor, talk to your advisor, and then we're also going to the holidays. Start planning that holiday budget, and you can save some money there and not get that credit card bill, regret in January.
I'm sure we'll be back to talk about that. Hard to believe that we're already talking about wrapping up 2013.
That's
All
amazing.
right, Bob. Thanks so much for the advice. We'll be right back.